Carborundum Universal Limited earnings conference call. Kindly stay connected. The call will begin shortly. Thank you. Ladies and gentlemen, good day and welcome to the Carborundum Universal Limited Q3 FY22 earnings conference call hosted by Kotak Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aditya from Kotak Securities. Thank you and over to you, sir.
Thanks, Madhisa, and good morning to all. From the side of the company, Carborundum Universal, the management is being represented today by Mr. N. Ananteshan, the Managing Director, Mr. P. Padmanabhan, the Chief Financial Officer, and Mr. G. Chandramouli from Investor Relations. I thank the company for the opportunity for us to host the call, and I would request him to make opening remarks that cover not only the performance of the quarter by, but also some sense on the recent acquisitions that they have done and certain geopolitical events that are happening in the Russia side of things. Thank you, sir. Over to you.
So good morning to all of you. Before we begin, as a practice, we will now have Mr. Chandramouli read out our disclaimer and then I will take the call.
Good morning. During this call, we may make certain statements which reflects our outlook for the future or which could be construed as a forward-looking statement. These statements are based on the management current expectations and are associated with uncertainties and risks are more fully detailed in our annual report, which may cause the actual result to differ. Hence, these statements must be reviewed in conjunction with the risks that the company faces. Thank you.
Thank you all again for joining on this call, and I hope that all are keeping in good health. Again, good morning to all of you and wish you all a very happy and safe new year. I guess we are meeting for the first time in this year, and hence looking forward to a great year ahead for all of us. So we meet after a very exciting and difficult quarter for CUMI. On the performance front, this quarter has been CUMI's best so far in terms of the top line and the bottom line. This was possibly achieved amid tremendous supply chain challenges and a relentless cost push in terms of input costs. At the same time, this quarter has been very exciting in terms of executing our strategic growth plans through acquisitions in India and Europe. On October 6th, 2021, the company acquired 72%, 71.99 to be exact, of the equity stake in Plus Advanced Technologies Private Limited. Plus, along with the wholly owned subsidiaries in Netherlands, have become subsidiaries of CUMI effective from this date. Plus is a specialty materials research and manufacturing company involved in the fields of phase change materials for thermal energy storage, like in use in cold chain logistics or in the upcoming EV battery space, and specialty polymeric additives for enhancing mechanical and barrier properties of products like in packaging. During the quarter, the company also initiated plans to acquire the assets of Abrasives One Marker GmbH, popularly known as Awuko, in Germany for a total consideration of up to 8 million euros. So this includes land and building, plant and machinery, all fixed assets, leased assets, brands and trademarks, patents, technical know-how, and other intangible assets after the closing conditions having been met. Awuko is a 120-year-old leading brand in coated abrasives business and is a market leader in leather, lacquer, and wood polishing applications. So this acquisition is very much in line with our plans in Europe. The transaction is now complete, and since 1st of February 2022, Awuko is part of the CUMI Group. We have also done work during the quarter in terms of identifying and conducting due diligences of another company in Germany, and through a newly owned step-down subsidiary entered into a share purchase agreement for acquiring all shares in the German company Rhodius Abrasives of February 2nd, 2022. This was for an enterprise value of 55 million euros. The transaction is expected to be complete by 31st of March 2022. Rhodius, for your information, is a leading abrasives brand in Europe and is into the manufacturing and sale of abrasive tools and ancillary products, cut-off wheels, grinding wheels, diamond tools, coated abrasives, carbide cutters, etc. So it has presence in Germany, in Brazil, South Korea, and in a couple of other, and the US. These acquisitions provide CUMI a stronger and a wider global presence. So both companies come with their distribution channels as well. Entry into new products in leather, wood, and lacquer applications through Awuko. And on a synergy benefit, CUMI being a major producer of abrasive grains, silicon carbide and fused alumina, would also provide these new partners with raw material security. So that has been the busy quarter with operations on one side and driving the growth plans on the other side. At the meeting held yesterday, the Board of Directors have declared an interim dividend of rupees 1.5 per share, 150% on the face value of rupees shareholders of the company. Coming to the performance in October-December quarter, at a consolidated level, sales recorded 891 crores. This translates to a Q1Q growth of 23% and 7% sequentially. And at the standalone level, the company recorded sales of 596 crores, which marks 22% increase over Q3 of last year. On a sequential basis, this records an 8% increase. The growth was driven by all three segments, and all the major subsidiaries overseas have performed significantly. When it comes to the bottom line performance, profit before tax was 141 crores as against the 114 crores at the consolidated level, and profit after tax and non-controlling interest grew by 16% to 102 crores against rupees 88 crores in Q3 of last year. At the standalone level, PAT increased to 67 crores from rupees 66 crores in Q3 of last year. Despite increase in sales and profits in absolute numbers, the margins were lower by 2.2% due to partial absorption of increasing input costs, largely in the abrasives and in the ceramic space. Coming to the ceramic segment, the consolidated sales recorded is 213 crores. Sorry, before I go into the ceramic segment, I will come to the abrasive segment. So when we look at the consolidated abrasive segment, it recorded rupees 341 crores, 13% up quarter on quarter, and the operating profit was rupees 47 crores, by about 6% quarter on quarter. Standalone operations performed well despite challenges of chip shortages and increasing fuel prices faced by the auto and auto component sector. The margins were impacted due to the increasing raw materials and energy costs, but were managed through price increases and cost control innovations. All subsidiaries performed significant in terms of top line compared to the same period of last year. The Indian subsidiary Sterling Abrasives had a maximum impact on the margins. Coming to the ceramic segment, the consolidated sales recorded rupees 213 crores, marking a 33% increase in top line quarter on quarter. Operating profit was 43 crores, 25% up quarter on quarter. The demand scenario continues to be good, both at standalone and global operations. Standalone ceramics business performed well and registered double-digit growth despite slowdown in export markets due to the third wave of COVID. Subsidiaries in Australia and America registered significant growth as well. However, the margins were impacted, but reduced through cost innovations like transitions of kilns from liquid fuels to natural gas. The refractory segment continued to perform better on back of good orders from repair and maintenance, as many core industries are beginning to invest in these areas. In minerals, the consolidated sales recorded 361 crores, marking a 24% increase in top line on a quarter-on-quarter basis. Operating profit doubled to 63 crores when compared to the same period of last year. The demand outlook remains positive for minerals business due to production cutbacks in China owing to environmental concerns and leading to better realizations. Standalone businesses and subsidiaries in Russia and Africa also registered double-digit growth in top line and significant improvement in bottom line. Increasing input costs were offset by price increases to some level in most of the product segments. We also had a good run in terms of our in-house power generation at Maniar. And that has helped shore up our bottom line. We have a good order bank at present and expect the demand to be robust in coming quarters for all three business segments. However, maintaining or increasing margins will be a challenge considering higher input costs, but will be managed through price hikes and cost innovations. In terms of capex at consolidated level, we have made considerable progress and spent rupees 118 crores in the first 9 months. On the COVID front, like in many parts of the world and the country, there is a surge in COVID cases among our employees in many of our factories. But the performance was not impacted as the businesses are well prepared with safety protocols and the vaccination drives. We believe the new variants of COVID are the key near-term risk, but an increase in the pace of the vaccination, with nearly 99% of our workforce having received at least one dose and around 86% with double doses, should contain any disruption. The Union Budget 2022, which was presented on 1st February, was done amid high expectations. The Economic Survey also forecasts a 9.2% real GDP growth in FY2022, followed by an 8 to 8.5% growth in FY23. The government has continued its course to improve the quality of its expenditure by focusing on investment growth. This should augur well for CUMI, and CUMI has continued its focus on growth from core businesses, expansion through acquisitions, and working on emerging areas like clean energy, electric mobility, and advanced manufacturing. So with industrial output increasing sequentially and the high-frequency data depicting return to pre-pandemic levels and possibly also sector, our businesses have also recovered. But the challenges of increasing costs and the uncertainties regarding the COVID still persist. So now I will request Mr. Padmanabhan, our CFO, to walk us through the financials.
Thank you, Anand. Good morning, everyone. Let me summarize the financial performance for the quarter ended December 31, 2021. The consolidated sales for the quarter has increased to 891 crores from 727 crores, showing an increase of 23% in the corresponding period of last year. This is mainly driven by the steady performance across all the business segments. Of this, the standalone has increased by 22% to 596 crores from 488 crores. The consolidated PBT was at 141 crores, which was up by 27 crores and about 24% growth on quarter-on-quarter basis. At the standalone level, the PBT was for the quarter was at 88 crores against 85 crores during Q3 of the previous year. On a consolidated basis, profit after tax and non-controlling interest for the quarter was at 102 crores as compared to 88 crores in the corresponding period of last year. At the standalone level, the PAT increased to 67 from 66 crores. At the consolidated level, the PAT margin dropped from 12.1 during the previous year to 11.4 during the current year, mainly due to the cost push across all the businesses. At standalone level, it has decreased from 13.5 to 11.2%. This is also mainly due to the increasing input cost. Moving on to the segments, on abrasive consolidated, sales was for the quarter increased to 341 crores from 303 crores in the corresponding period of last year. Standalone sales grew to 280 crores from 253 in last year. The standalone business, Russian subsidiary and the American subsidiary registered significant growth. At the consolidated level, the PBIT was 47 crores, decreased from 50 crores on account of the partial absorption of the cost inflation. Electrominerals division consolidated sales for the quarter increased to 361 crores from 290 crores in the corresponding period of last year. At the standalone level, sales increased to 177 crores from 130 crores of last year. The standalone electromineral segment, African subsidiary and Russian subsidiary grew in double digits. The consolidated electrominerals business recorded a PBIT of 63 crores against 30 crore, showing a significant growth on the back of volume growth and higher realization. Profits were also aided by the higher power generation at our Heidel following good rainfall. Consolidated sales of the ceramics segment grew by 33% on quarter-on-quarter basis from 160 crores to 213 crores. The standalone sales grew by 27% on quarter-on-quarter basis to 178 crores. Standalone ceramics business performed well and registered double-digit growth despite slowdown in the exports market due to the third wave of COVID. Australian subsidiary and American subsidiary registered significant growth. Consolidated PBIT of ceramic segment for the quarter increased to 43 crores from 34 crores in Q3 of last year. This is mainly on account of the volume growth, better product mix, and cost innovations to absorb the increasing input cost. On the finance front, QMI standalone continues to be a debt-free company, and at the consolidated level, the debt-equity ratio was at 0.015% as of Q3. The total debt on a consolidated basis was at 38 crores as compared to 42 crores as of September. On the forex cover, QMI is typically a net importer in dollar terms and net exporter in euro terms. We cover the net exposures as appropriate and in accordance with the forex policy. The balance sheet is very strong, and it is also evidenced by the net cash position and low debt equity ratio. The cash and cash equivalents, including deposits with tenure not exceeding 3 months net of borrowings, was at 616 crores. This concludes my update on finance.
नेट आ रहा है क्या आपका? नेट आ रहा है?
Sir, would you like to begin with the question and answer session?
Yes.
Sure. Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the question queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Hi, sir. Good morning. Congrats on a good set of numbers. My first question is with respect to the kind of volume growth that is being seen across all these segments. If you can give some color, it would be great, sir. I know multiple products are there across all these, each of the 3 categories. But if you could give a sense on the volume increase vis-a-vis the price increase, will be great.
As you pointed out, volume increases has happened across all segments, and let me start with the minerals business first. So the minerals business had been preparing itself on its capabilities to increase its volumes over the last year and a half. And given the fact that we saw during the course of late last year and early this year that the disruptions of supplies from China were increasing, and both because of the emission requirement of their operations, tightening emission requirements, the energy demand going up, and which has also made people to shut down some of the operations. It was an opportunity for EMD, and customers also were looking at alternatives to China. So this has definitely helped, and EMD has also been working on moving away from what we call a traditional raw materials to synthetic raw materials, which gave them higher volumes from the same infrastructure, and also better efficiencies and cleaner operating conditions. So that was the one change which happened. This has happened not only in India but other minerals businesses as well. So the minerals businesses are enjoying a good run in terms of the market offering a better pricing. So that is good news, and hope it continues to be this way. In the case of abrasives, obviously the precision abrasives has been doing well in Q2 and definitely in Q3. So how long will this the volume demand last has to be seen, given the Q4 numbers, or the Q3 numbers, which many of the auto industry captains have been reporting. So because we come for the auto industry for us later. The factories has been driven both on the repairs and maintenance and also on new projects. So hence on the fired component, definitely there has been a volume growth. There has also been a pass on of costs to some extent across. So I would think that on an overall basis, about 3 to 4% would be about the price increase impact.
Okay. Got it, sir. And with respect to, this quarter, electromineral margins stood at 17%. Is it some kind of a new normal, or so basically it will be in the range of 12 to 13%, which we used to do earlier? So if you can give some clarity on the margins, it will be great. So.
See, the margins in the electrominerals has definitely been positively impacted by two things. One is, I would say, in terms of the prices of commodities going up overall, whether it is silicon carbide or fused aluminas. So that has naturally pushed up realizations and consequently the margins. So the margins have also been helped by the pivot that the business did in terms of choosing to go the synthetic raw material way, which has enhanced its cost position. The business also has been helped by a extremely good rainfall this year, so which has been a record generation of our hydroelectric power. So this has definitely contributed to increased margins. As to your question whether this is the new normal, I would say it is we are progressing towards that, but 17.5% would be a very difficult thing to replicate. I would rather stay around 14% at this time.
Got it, sir. Got it. And my next question is with respect to the acquisitions that we have recently done. At least for the major acquisitions, if you can give what kind of growth that we can achieve and the margins which are there in that, it will be great.
Okay, on the acquisitions front, I would not like to comment right now because one, we just closed down the acquisitions. All of us should realize that these things were done in a pandemic situation where we have not visited any of these plants, right?
Got it.
We have been meeting people, discussing with them, got the transaction done all through the teams virtually. So you would need some time to go and get into much more details. So I would rather say that maybe possibly for our April earnings call, we will have a better understanding of the acquisitions.
Got it. And sir, with respect to the electromineral, the supply of for electronics, what is the progress in terms of purity improvement and all the other things?
There has been quite some work happening there. So while both Russia and India has been working on the raw material front, we are now in a position to, because then what we realized is that the chemistry or the purity of these materials have to be tested at international labs, which are standard. And today we are working with an international lab in the US to characterize these materials first to know exactly where we stand. But we are making progress there.
Okay. And so basically, will it be market ready in, say, by the next financial year? I mean, FY23?
That's our target.
Okay. Got it, sir. I will come back in the queue for more.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Ankur Sharma from HDFC Standard Life Insurance. Please go ahead.
Yeah. Hi, sir. Good morning, and thanks for your time.
Not at all.
Yeah, just two things. One, if you could comment on the whole geopolitical situation in Russia. Obviously we have our manufacturing facilities there. So any impact, either on production or supplies into EU or rest of the world. How are things progressing there, please?
Yeah. So I think it's a very, very valid question given the times, and we have been in constant touch with our teams in Russia and also taking input from people in the know and in the political spectrum. What we see on the ground is possibly different from what we see in the newspapers. The transactions or the businesses, what we have with the EU or even with Ukraine, for example. So we do supply material into Ukraine, we buy material from Ukraine, and we don't see any problems with that happening. So our team there, Mr. Sergey Kostrov, is our. So he's been very closely following up and updating us. We believe that things will be more business as usual on the business front, and unless something dramatic happens, the little danger of any disruption. That is as of now. So, and in a political situation like this, when tempers run hot, none of us can predict anything. But we hope that good sense prevails.
Okay, fair. Second, sir, on the two acquisitions we've done, right? So while you highlighted overall, in terms of the values you're paying and the areas they operate in, what does QME get? If you could just detail a little more. Is it technology? I'm obviously assuming we get access to more distribution, geographical areas, and as you said, supplies from Russia. The raw materials for these companies. But if you could just tell us a little more. I know you said you can't talk about margins at this point, but a little more on synergies. What drove you to take up these companies? Would be very helpful.
Sure. The abrasives business is, it's a very global business, but very local. And QME has been a very strong player locally in India, but with global, when I say global presence through its subsidiaries in QME America. largely for the precision abrasives, which goes into the automobiles, aerospace, defense, etc. In India itself, you will find that the fastest growing segment in abrasives is also the what I would call the power tool driven productivity linked abrasives business, right? So these are the power tools accessories which goes on to power tools, and all of us see that there's a big shift in the way that people are using abrasives, so they want to do it faster. And this is a trend which you are going to see across the world. So when countries and countries are investing in the infrastructure, whether it is in India or in America or in other parts of the world, you will find an increasing use of the power tools and its accessories. Now, while we have our product group in India, the Rhodius acquisition brings about a significant change in terms of its technology profile, in the terms of its the brand perception and the brand visibility that it carries not only in Europe but in other parts of the world. It's among the leading manufacturers of these products. And what we hope to gain out of this is one is it also has a nice distribution network across Europe. So it helps Kimi either way. One with getting the Rhodius products into India and building for the future, and also using the Rhodius distribution channels to distribute our range of distribution-led products, whether it is in vitrified or whether it is in coated abrasives, etc. So that's one synergy we are looking at. The other one is same thing in the case of Awuko. Awuko is a very strong brand in specialty leather woodworking, where they can grind with precision very wide products, which is like plywood or the MDF for infrastructure and housing requirements. So those are the advantages that we built. So it kind of extends our product portfolio, brings in technology, brings in a distribution network in Europe, and also addresses some of the gaps that we have back home in terms of our product profile. So that's the second thing we are looking at. And the third, of course, is in today's world, any abrasives manufacturer would love to have raw material security. And the fact that both in Russia and now in India we have significant quantities of raw materials, abrasives grades, fused aluminas and silicon carbide will only help those companies as well.
Okay. No, that's very helpful. And just one last one, sir, on the abrasive business again. While you did highlight some slowness in demand, possibly from the auto side, could you also talk about some of your other key end markets, industrial machinery, fabrication, construction, and so on and so forth? So how are things looking on those end markets as well, please?
See, I can tell you the trend. What you're saying in while the chip shortages may have cause some disruptions on the auto sector and also the auto component sector. Plus, we're also seeing definitely a slowdown in the two-wheeler sector. So the two-wheeler sector, driven by possibly fuel price increases, the increasing in prices, so it's affected the rural offtake of two-wheelers significantly. What we see now, as of now, on the mass market-led products, whether it is the infrastructure for the housing, all of them, as of now, seem stronger. And again, this could also be not only to do with the demand of from these segments, but also the availability of material from China. So getting these products out and filling up shelves would be one way of ensuring that we limit the competition and prevent the competition, especially from China, making a bigger headway. So that's how we're looking at it.
Got that. Great. So very helpful and all the best. Thank you.
Thank you.
Thank you. We have the next question from the line of Harshit Patel from Equirus Securities. Please go ahead.
Hi, good morning, everyone, and thank you very much for the opportunity.
Mr. Patel, I'm sorry to interrupt, but the audio is not coming through clearly, sir, from your line. Could you use the handset?
Is this more clearer?
Yes, sir.
Much better.
Yeah, sure. Thank you. Sir, now that we have acquired a couple of abrasives companies in the Europe, and we were also looking to expand our presence significantly in the North American market, where we had indicated that we would like to be closer to the customers.
Yeah.
So is there any thought process on that front, and also on the similar lines? I mean, power tools, you have just indicated that, the usage of those tools is increasing at a rapid pace, and that is also resulting into the higher penetration for abrasives. So is there any thought process to expand our presence in the power tools? If I remember correctly, we also have a small business on this front where we also sell power tools, but we have really not been able to scale up that business. So that would be my first question.
So, on the power tools, power tools is a completely different business. In the sense that the capabilities that are required to build a power tool business is very different from that of an abrasives consumable. So the power tools what we have today is very, very limited in terms of range, and it's largely been used as a marketing tool for us, where a power tool carries the brand for much longer than a consumable. So we are very clear that we are not in the power tool business as of now. We are only in the accessories business. Coming to your question in terms of growth outside of Europe, we have always been mentioning that we have to be in markets which are closer to the customers, whether it is in Europe or in US, and opportunities crop up. So when opportunities crop up, then we have to take advantage of that, and that's precisely what's happened in Europe. So our overall strategy of expanding our abrasives footprint still continues. So if there are opportunities coming up in the US, we would definitely look into it as well.
Sure. Just a small follow-up on the acquisition part. So out of the 55 million euro of the enterprise value that we would be paying for Rhodius, what would be the debt levels for that particular company?
At this point, I would not like to share these details. We will have a detailed sharing of the information on both Rhodius and Anuco at the April calls.
No problem, sir. Sir, my second question would be on one of our growing segments, that is alternate energy. So recently, another Indian company who's also a supplier in this particular segment, they have posted a very strong growth. So are we also witnessing the same kind of outlook? If you could give some flavor on what would be our current level of sales towards this particular segment and where we could reach probably next 3 to 4 years, then it will be very helpful.
Clean energy is definitely one of the fastest growing segments, and we have been working with this customer for the last about 10 years, and definitely we see much faster growth with these customers in the solid oxide fuel cell space. We are preparing ourselves, and we continue to build our capabilities in this direction. And I can only tell you that the reports what you have read and what you have seen in terms of the growth rate of this segment is definitely on. So Our capability building is also on the same lines.
Understood. So if I can squeeze in just one last question on the solid state batteries. So I think a couple of earnings call ago you had mentioned that the trials were going on. So these were some elements to prevent the thermal runways. So essentially we were doing this through our tape cast ceramics. So is there any progress on that front?
We have now started supplying those what do you call the ceramic products or ceramic fiber products for these battery thermal runway protection, and it is still not scaled up. It is still undergoing testing, but we see some possibilities there.
Sure. And sir, next year we would be seeing some revenues from the SiC based ceramics. I mean, I think we are undergoing the pilots as of now. So can we see, sir? Yeah.
We would, because the progress what we have made there again is very positive in terms of getting our approvals done in both, not only in India but also in customers in Japan and in Europe. So we would definitely see progress from the silicon carbide components. Yes.
Sure, sir. Thank you very much, sir, for answering my question.
Thank you. We have the next question from the line of Bhumika from DAM Capital. Please go ahead.
Good morning, sir, and congratulations on a good set of numbers. Sir, we're working on a lot of new areas. If I look at ceramics, we're working on fuel cells, energy storage, construction chemicals, 3D printers. Within AMD, there is graphene, SOFC, etc. As you said that within AMD, high purity will start into commercial applications next year. All these new initiatives that we're doing, what is the status of all of them? And, where do we see these revenues scaling up in the next 4 to 5 years, which will drive much more stickiness in terms of revenues as also better margin profile?
So Monica, as you very, very well know that, we are looking at this business as broadly two segments. One is what we call the regular businesses or the commodity types of businesses, which are the workhorse materials that we need to run our current businesses. The second is the high performance materials. There's a bunch of them, and this is across divisions. So whether it is the graphene or the high purity silicon carbide or the stabilized zirconia that will finally go into electrolyzers. So these are some of the projects that are in the pipeline, and we can't scale both of them simultaneously. So the effort has been on scaling up the regular materials, and that's what we saw last year, and we continue to see the next year as well. On the high performance materials, the growth would not be as rapid as in terms of the scale as normal regular material, because most of these are specific to customer applications, would require a lot of qualifications with them, and then we get into a scale up phase. I would presume that while we have small amounts of commercialization and which are more for, let's say, seeding the market in across these products, I wouldn't call it as a significant to the sale as of now. But I would possibly believe that over the next 2 years, we should see a higher participation of these products in the portfolio. As to the volumes, as to the realizations or margins, I would not comment on that now.
Sure, sir. Sir, while I understand that you want to speak about the acquisition at a later stage, if one were to just talk about, not specifically on the company or anything of that sort, but more about the addressable market that expands for us, given that we're entering into Europe with these power tool accessories which we're not present in. What is the market size that is possibly there, which through these acquisitions we can kind of tend to explore further and grow within that?
Broadly, Europe itself is a billion and a half market or more. Then we are talking about the benefits it can bring to India, and specifically in segments where we are not strong as CUMI. So CUMI has always been more focused on the vitrified precision and the vitrified standard products, whereas resin bonded cut-off wheels, thin wheels, while our presence has been there for many years, we are not strong across the portfolio. And that is one of the reasons why we were looking for a company like Rhodius to bring in technology, to bring in a globally acceptable brand, and which help us leverage the opportunities in the Indian market. So I'm pretty bullish about what we can do together.
Sure. Sir, just one thing on the EMD segment. If I look at it, the South African entity has kind of turned around and done quite well in the current quarter. Is this sustainable, and what is our long-term strategy on this entity, given that we were looking to kind of wind it down, etc.? So where are we on the status of our thought process on the entire South African entity?
To be very honest with you, we have been we are taking it quarter by quarter. So working with the teams there and ensuring that we have stable volumes first, because given the current conditions where the markets for minerals is largely very positive, and the demand for especially materials like the fused zirconias are increasing significantly. Obviously, there has been an impact of the scenario in China, because China has closed down high energy consuming materials, and zirconia is one of the large energy consuming products. So that has given a breather for zirconia. So while saying that, the team there has ensured that the operations are run much better. So cutting down on the shutdowns and getting the volumes to be consistent. So that has been the effort over the last 3 months or 4 months, and that has definitely started paying off. So to answer your question whether this is sustainable, we are going to take it quarter on quarter. We will work with the teams there to ensure there is a more stable operations and hopefully build a stronger business before we take a call.
Sure. And if I may just squeeze in one more question, on our current capacity utilizations across segments broadly, and given all these new initiatives that we're looking at, what kind of capex or capacities we will need to kind of expand, or in terms of capacity, if you can speak about.
Capacity building would differ between segments. So if I were to talk about the electro minerals business, obviously the capacities in Russia are already stretched, though we are adding a couple of fusion cells, as we call it. So that would give us some capacity, but then not a very significantly large capacity. In India, we have done work on increasing capacities and also increasing the conversion capacities. So that will has already come into play partly this year and will come into full play by next year and a half. So we are looking at building up the fusion capacities, which would possibly be another 25-30% of what we have today. So that will give us a good position in the electromineral space in India. And in abrasives, again, it depends on the product groups. So like I mentioned, we would have, let's say, invested earlier significantly on the thin wheels, but now with the acquisition of Rhodius, we do have capacities. Plus, that's for Germany, but we also have to work with the teams in terms of building thin wheels capacities for India based on the Rhodius technology. So that is something which we will be doing over the next year, or later this year. On the ceramics capacities, there's been a continuous focus on building the metallized cylinder capacities. So with both the lines running reasonably well, we now have to start looking at increasing the capacities there. The ceramics for mobility applications, whether it is for the ICE engines and or for the EV, that is also getting that will be largely a kiln firing capacities. So that will be modular and can be coming up. And in terms of the thermal products, refractory products, again it would be the kiln firing capacities that will go up. So it is not a one large big bang kind of a capacity building, but identifying those capacities in a modular fashion that would both debottleneck and also for specific product groups increase volumes.
Great, so wish you all the best. Thank you.
Thank you so much.
Thank you. We have the next question from the line of Sanjay Satpathy from Ampersand. Please go ahead.
Yeah, hi sir. Thanks a lot for the opportunity. Just wanted to clarify, I heard somewhere in the discussion that you feel the current EBITDA margin of somewhere around 17.5% is not sustainable and could fall to something like 14%. Did I hear it correct?
Sorry? Ravi asked 17.5% is very sustainable. You said 14%.
That's on EMD. So that is on the electrominerals division.
Okay. So as a company, you are moving up the value chain, I believe.
Yeah.
So considering all that and also your focus on electric vehicle and many other things, how do we really articulate our growth trajectory as well as margin from here on, sir?
Sure. As I said, broadly there are two segments, which is across product groups we have what we call the cost competitive segments. So whether it is in the minerals business or in abrasives, and that will be driven by control on costs and by design, how can we be more competitive, and that's how the margins will be driven there. While on the specials, the across businesses, it would be more on variety or a variant and also trying to get the realizations up. So that's the combination that we are working on in all businesses.
If we can just ask the same question differently, is the cost pressure or the negative headwinds for margin have peaked for you, or there are more to come? And also, are you more confident of demand than margin at this point of time?
Sorry?
Are you more confident of the demand outlook rather than margin at this point of time?
So on the legacy businesses, yes, we are more confident on the demand because the margins are based on the input costs also significantly and how much of it can be passed on. Because the kind of volatility we see on the prices on raw materials, it has not been seen before because we all know that the commodity prices, input prices will go up and are going up, but not the frequency which we saw in the last a few months. So I must be cautious here in terms of saying that yes, while you see the demand is there, but then there is also the input costs uncertainty which can cap the margins.
Understood. Thanks a lot, sir.
Thank you.
Thank you. We have the next question from the line of Sujit Jain from ASK Investment Managers. Please go ahead.
If you were to explain the capabilities that you bought through these acquisitions to a layman, so for example, Plus, which manages the negative or low temperatures, does it mean that in areas where there is no refrigeration, that is where it is useful, and to that extent, its application is limited? Number one. Number two, Rhodius, again, what kind of products and what applications? And number three, all of these new things, stabilizers, zirconia, high performance, SiC ceramics, graphene, these two acquisitions, how much percentage to the top line it will add on a regular basis, on a compounding basis going forward?
Plus is a thermal energy storage material. They also deal with specialty polymer additives. There are two parts to that business. And today, the one part of the business, which is the thermal, which is the specialty additive business, it goes into making barrier films for medical packaging, for food and pharma packaging, and for the improving the strengths of the strength and what I call the fire resistance of the components in automotives and other mobility solutions. So that's one part of the business. The PCM business, or the thermal energy storage business, deals with cold chain transportation, refrigeration, as in the last mile deliveries. You also have that in building and HVAC. So it is definitely an application intensive business, but can deliver significant savings in terms of energy usage. So that's something which is exciting for us as a thermal materials company. So one end where we protect materials at 2000 degrees centigrade, we also have the other end materials which can and protect and save energy at minus 60, minus 70 degrees centigrade. So it's a big spectrum that we are working with. In the case of Rhodius, it's very clear, very focused on the thin wheels portfolio for grinding, cutting, and this would address the requirement of let's say engineering, fabrication, infrastructure, woodworking, stone cutting. So these are all regular industrial consumables. On the new businesses, for example, the zirconia, which goes into the as electrolyzers for hydrogen fuel cells, or SOECs as they call, and on the graphene, which goes as additives into batteries. So these are some of the newer businesses, and as of now, honestly, I cannot give you a top line growth for the businesses. Right?
I'm asking all of these initiatives put together, would they add 2-3% to growth for a long time to come?
I would believe so.
And onto the negative temperature that you manage with Plus acquisition, does that mean, you said last mile, so where refrigeration is not there, you would use it, or even where refrigeration is there, cold storage is there, it can be used?
For example, in trucks which has a refrigeration, right? So in using a PCM panels, you can reduce the cost of energy which goes into running those refrigerations, and the while PCMs will deliver the temperatures, or the cold room temperatures that is needed to keep the trucks on the road. So you are reducing the energy, the fuel that is burnt, plus also reducing the carbon that is emitted. So it's a double impact that we are creating. In the case of last mile storage or vaccine transport, where you don't have a refrigeration, these panels work as well. So they can be designed to give you a temperature range, sustain the temperature range over a period of 10 hours or 12 hours. So that's what what they do.
Right.
Quite a bit of energy savings there.
Right. And in terms of margins, 17.4% margin, 9 months for the company. This is at the higher end at what we've achieved previously. Would these margins be sustainable given new initiatives and given the supply chain security that we have compared to the other companies?
See, I always said that, we, of course, everybody's desire is to ensure that the margins go up. But we all of us know that there are always some headwinds which we don't anticipate. So none of us anticipated the kind of rise in shipping costs that we saw the last couple of quarters. And so while we'll try to have multiple mitigating initiatives in terms of whether passing on the cost or looking at alternative ways of transporting material, I would say, let's be conservative because there's too many unknowns in the place still. So 17.4, we are happy that we are able to deliver those numbers right now. But I would believe around that is what we would be looking at on a stable basis.
Sure. Thank you and all the best.
Thank you.
Thank you. We have the next question from the line of Aditya Mongia from Kotak Securities. Please go ahead. Mr. Mongia, please go ahead with your question.
Am I audible to you, sir, now?
Yes, very much.
Great. You made a remark suggesting that you are more confident of demand versus margin. I wanted to kind of check with you on, let's say, demand visibility across the key segments that you operate in, and where you are, let's say, the most position, where you are seeing, let's say, some signs of some slowdown kind of happening. Just wanted to kind of color across segments in terms of demand visibility.
I believe that the electrominerals business, which is the raw material business, is in a much better position as far as the visibility goes. So this is a combination of both the project orders picking up and also the China one because of the China one strategy. So that is giving us a higher demand visibility on the electrominerals business. On the ceramics business, the part where we are dealing with in terms of the solid oxide fuel cells and the engineered ceramics, the visibility is reasonably good. These are contracts which we generally tie up with customers, so hence for us that visibility is much better. On the high temperature side, we did see a significant rise in inquiries in terms of project orders for the last 2-3 quarters. But we have to see whether the momentum is sustained. While we do see hear about projects being announced, especially in the solar renewable space, how much of that will translate into projects on an ongoing basis is to be seen. So there could be some slowdown in that part of the business. While abrasives, we are, as I said earlier, the demand slowdown would largely be on the precision side of the business rather than on the mass market side.
Sure. A similar comment if you can make, let's say, from the perspective of ability to pass on cost to the end customer across segments. As in, is there more room to do so in certain segments versus the others, where you may be hitting, let's say, a floor or let's say a cap?
I would believe that it would be relatively easier to pass on the cost push on the raw material side because people need raw materials, and it is evident that if there is an input cost in the raw materials, it would impact the product cost for us, and people can't live without raw materials. Definitely, there would, in terms of whether it will happen quickly or whether there will be a little bit of a lag before people accept. Obviously, there will be a pushback. Nobody is going to say that yes, I will accept raw materials immediately and the price increases immediately. So, in a relative term, I would believe that the electro minerals has a better chance of passing on the raw material cost push on their input costs. It could be a little more difficult on the ceramic side because many of them are kind of contracted, and it takes a lot more effort in terms of communicating and getting customers to agree to regular price increases. On the bread side, again, while definitely there will be a problem on the mass market or distribution side, could be a less challenging than possibly a precision abrasives.
So, what I want to the confusing statement to me on the call was that you were saying that yes, we can take more price increases, but sustaining current margins may become a challenge. So I just want to kind of get it right. Are you kind of hitting a kind of a cap in terms of the kind of price increase you can take in for you to making that comment that margins will not go further up and actually go down?
For example, if the raw materials, in some cases, raw materials went up by 30-40%. Right? So we can't pass on all that cost in one shot.
Sure.
So that's what I was meaning. So while we would definitely, try and get the cost passed on, the entire cost can't be passed on in one shot.
So I'm just trying to get whether there's an upward bias to margins from here on, given that you have not taken what you could take as price increases, or is there a downward bias? That is the simple question I'm trying to
At the same time, we are also not sure about how much of price increases is going to happen for input costs. Right? So the fuel prices are creeping up. It has not been, if it crosses $100, and so while one side, yes, we would continuously drive the markets to get our realizations up. At the same time, the input costs will play a part.
Got that. So those are my questions. Melissa, if you could take the remaining questions up now. I'm done. Thank you.
Thank you. We have the next question from the line of Harshit Patel from Equirus Securities. Please go ahead.
Hi, sir. Thank you very much for the opportunity again. Just a small follow-up from my side. Sir, I noticed that we have included the results of Plus into the other segment, the sales and the margins, rather than the ceramics. What would be the reason for that, sir? And are we going to do the same going ahead in the results?
See, it is not a ceramic material, so it is a polymer material. And for the present, we don't have a segment. Maybe Pagru can answer it much better.
Yeah. See, it depends on the application. While it's in the nascent stage, while move on, depends on the application, we will change that. At this point, we want to monitor it closely. That is why we are parking it in other segment.
Understood. And when we had acquired that business in August 2021, at that time we had reported that the EBITDA margins for this business in FY20 were around 10%. So do you think it can move up to around, let's say, 15 to 20% closer to the blended margins for the company level, or maybe closer to 20%, which is the margins for ceramics? So is there a scope to increase margin to that much, or it will continue at probably around 10% kind of the margin?
While the expectations to increase the margins will be there, we need to consider the rising input cost, fuel cost. Therefore, it's a mix-up of all. And if the demand increases, we will certainly increase the prices also.
Right. Sure. Understood, sir. That would be from my side. Thank you very much for answering my question.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Jason Soans from Ashika Stock Broking. Please go ahead.
So thank you for taking my question. Most of my questions have been answered, but just wanted to know, I mean, you did specify about some slowdown in demand visibility in the precision segment, which basically caters to the auto and auto component segment. Now, I just wanted to understand, I mean, how do you, if I have to see this from a medium to long term sort of picture, don't you think this chip shortage thing is transient in nature? It might be solved in within 12 months, and you could see a strong recovery in abrasives volumes. I mean, if I have to paint a sort of a positive picture to this. So, just wanted your sense on this, on the auto sector demand rebounding, because if there is a chip shortage, I'm sure there'll be a lot of demand which could be back-ended, once everything sorts out. So, just wanted your sense on this.
No, I think you're right. So if the chip shortages play out and then we have much more stable outputs from the auto industries coming up, yes, we would definitely benefit in terms of our increased volumes on the precision side. So that's on the positive. So how long it will last, how many years it will last is something to be seen. While at the same time, we're also recognizing the fact that the EV adoption, definitely on the two-wheeler side, will have an impact. I mean, we also saw even the last month, about 2% of all the two-wheelers sold are EVs today. So EV adoption will have an impact, but on the four-wheeler adoption, it will still a little time away, I would guess. So with the overall demand for auto components exports and also for the ICE engines which would be there for some time, we do see a positive requirement, a positive trend for the precision abrasives, but this will have to pan out after the semiconductor shortages. Because semiconductor shortages are also impacting your EVs as well today.
Sure. So, I mean, in terms of EVs, I think so. Is there something like, in terms of your IC regular engines and EVs, precision abrasives would have more usage in EV two-wheelers or something like that? I mean, is that the correct assumption, or is it the same usage across, whether it be IC or EV?
No. IC obviously has a more usage of abrasives.
Right.
Than in an EV. It's very, very clear. So whether it is a two-wheeler or a four-wheeler, the usage of abrasives will come down. Will have to come down.
Okay.
Where it will still continue to be effective, used is in your one is the body, which is the coated abrasives, and also in the brake linings, the bearings, the forklifts. I mean the forks, shock absorbers, etc. So that continues.
Okay, sure. Okay. And so I just wanted some color on your mass market segments, engineering, construction, woodworking. There is a lot of focus on the budget as well on infrastructure creation. And, all over there is a lot of impetus on government capex or infrastructure, So in terms of this mass market segment, in terms of an end user demand for engineering, construction, woodworking, how do you see the demand panning out? Housing cycle also, we talk about an upcycle as well. So that will also aid demand in these sectors as well. So just wanted your sense on this.
So as I said, the mass market, if you look at the products which we supply into these mass markets, on the bonded abrasives, the vitrified standard abrasives goes into the engineering side, fabrication side. In terms of the foundry sector, or in terms of the fabrication sector through the thin wheel business, the stone cutting through the diamond blades, the woodworking, infrastructure, etc. through all the coated abrasives. So those are the mass market range of products. Which could be different forms. It could be shields, rolls, discs, etc. And these are all the mass market products. And that is it's a big retail channel that is emerging over the years. and that is one area where we are strengthening ourselves. So what I would think that the capacities what we have built last year on the coated side has definitely helped and will definitely help in addressing these markets on the coated. And similarly now with both the acquisitions and the further investments that we are making on the thin wheel side would help us address this again in the future.
Sure, sir. And so just about the engineered ceramics part, I mean, you did speak about, starting your suppliers to EV manufacturers on the engineered ceramic parts and to EVs as well as renewable energy applications. So how is the demand for that end market looking? Is it looking as healthy or is it strengthened? How is the demand for that end market looking?
What we see is on the EV ceramics for EV part, it is largely, most of the EV activity in India is in terms of assembling the components and putting together the vehicle itself, and not so much in terms of creating the ecosystem of parts that is required. That is still happening in countries like Japan and Taiwan, and that's where we are working with customers in terms of building our EV range of ceramics portfolio, and that has progressed definitely well over the last year. And hopefully when we see more of adoption of these parts happening in India, and we also seeing the requirement of ceramics just about coming up for the mobility, high-speed train mobility. High-speed trains are also requiring ceramics, and that is one area we started working with.
Okay. And so just my last question, just wanted a brief outlook on your metallized cylinders as well as your industrial wear ceramics. Again, in light of, lot of emphasis on metal capex, and, we can probably see metal capex also going ahead, some good traction on that front. So that basically has a bearing on your refractory, which is a thermal refractory business, and some color on the metallized cylinders outlook as well.
Metallized cylinders, they are into the vacuum interrupters. And that is something which is a growing business. As an interrupter, all right. So it's largely used in electrical transmission, generation and distribution, and whether it is in the fossil fuel based or any energy based, you would need distribution, and that is where these interrupters are used, and definitely we see that as a steady business going forward.
Okay, and what about the industrial wear ceramics? Some industrial wear ceramics and refractory? Some color on that?
So today, wear ceramics is supplied as either ceramic standalone ceramic products or in combination with steel as a lined equipment is designed. So that's where we work with both CUMI Australia and CUMI America. So they are specialized in addressing the design and installation of wear components and extending wear ceramics to wear materials, whether it is rubber-based ceramics or rubber-backed ceramics or with PU-backed ceramics. So that is giving us a larger play now. So wear ceramics is an application which is universal, or wear management is an application. So.
Okay, so the demand outlook is looking quite steady at this stage. Yeah. Thanks. That's all from my side.
Thank you.
We
We have the next question from the line of from Citi. Please go ahead.
Hi sir, and thanks for the opportunity. So just two questions. Firstly, on metal cylinders, what would be the current utilization levels of the new line that you added? And secondly, in terms of Ukraine, if you can please help quantify the exposure that VAW has currently in terms of top line contribution.
What was the first question, please?
Utilization levels of the new metal cylinder line.
So the utilization, we have two lines of metal cylinders, and we have installed the second line during the last year, during the course of the pandemic, and progressively we have been able to utilized both the lines, and first line is about 85%, and the second line is also running close to about 80% now. So that is made quite a bit of a progress both in terms of customer acquisitions and approvals. So I would say that both the lines are steady, and in terms of expanding these capacities, we are also looking at how do we do it in a more modular fashion and debottlenecking some of those capacities in the process stages. So that would definitely release some capacities for the next year. In the case of Ukraine, there is overall in the CIS we do sales of silicon carbide. I would say about 40% of our sales gets done in Russia CIS, and Ukraine is part of that sales group. We also buy raw materials from Ukraine for our abrasives in Russia. So the equation with the Russian suppliers, customers are pretty normal as of now, and that's why I said we don't see a major disruption happening on the ground. While there are definitely a lot of noise in terms of the geopolitical equations.
All right, sir. So just if I can squeeze in for metallized cylinders, in terms of export geography, what would be the top two ones for you?
We do quite a bit to Europe. Europe is a big chunk, of course, and also to Japan. Yeah, Europe, probably Japan, and a little bit of the US.
Understood. That's it from me, sir. All the best.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I would like to hand the floor back to the management for closing comments. Please go ahead.
Yeah. So thank you all so much for joining in today's call. I know it's been a kind of a difficult call for most of us, difficult quarter for most of us. There has been the Omicron COVID has taken its toll. Not happily, I would say fortunately not as bad as it was in the COVID-2, but then it has had an impact across industries, across even our own companies. We just hope that this is now tapering towards being an endemic. We also seen challenges in terms of chip shortages, energy costs going up, increasing input costs, and also the supply chain disruptions. And all of them is expected to remain there for some time. And despite the government and being very positive looking in terms of infrastructure spend, so let's hope that now the opportunities that we have worked on and we are working on as a company addresses most of these opportunities. And while we are quite positive about it, but it's also, I think, realistic to be cautious in our approach to building businesses. So our effort here would be to ensure that the business is what is gained in terms of profitability and growth will be sustained.
Thank you, members of the management. Ladies and gentlemen, on behalf of Kotak Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you so much.
Thank you.